Okay, so it's Tuesday, September 28th, 2010, and it's about 11:45 a.m. I thought I'd do a little video recap of the trade I've been posting on the blog, and now that I'm out, I can go ahead and explain how it turned out, the reasons for entry, exit, whatnot. Um, so pretty much looking at the daily chart, that's where it all got started off. I needed a level off a higher time frame, so I had this Fibonacci going from here to here. Now, with the fibs, I'll only use them if they are a confirmation or confluence to a support resistance level. So in this case, this green line, if we go way back on the weekly into this area, you can see that we had a couple of swing points here. So I mean, it's not perfect touch on both of them, but it's pretty close. And so I kind of just adjusted this roughly to that area because I knew there'd be some supply there. So if we change the color of this line, let's make it red so it stands out a bit. And we go back here, you can see that maybe red's a bad color because Fibonacci is also red. Let's make it orange or pink. Can't go wrong there. Alright, so we got the pink line, which is the support resistance level coming from way back on the weekly, and then we had the Fibonacci, which is kind of confluence for that. So a couple levels we're looking at. Excuse me. And so essentially, just I was watching price. Now this is a 4-hour chart, so now I have my edge on the daily. So I'm watching the 4-hour price comes in here, and we pull back a bit, right, as you can see. And then on the next leg up, we have a break of an attempt to push higher, and then a failure, kind of creating a dragonfly doji or a spinning top doji. So that again is my 4-hour edge. Seeing that maybe there's a lack of buying commitment at this time at least, but as you can see, the buyers did return. There's still good fundamental bias here to the upside, but we'll get into that for in a second. But in the near term, at least, there was that lack of buying pressure. So taking it down one step further, looking at the hourly, I started watching the price action here. So if we look at if we look at the price action here, one of the things that really showed up was just these longer wicks on the upper side. So we had this push up and the sell-off, creating that 4-hour candle, and then on the run back up, we had 1, 2, 3 candles. So it pretty much took 3 hours to recover, maybe 3/4 of the damage done in 1 hour. So you could see that there's a good amount of selling pressure, and the buying pressure is not, it's just not there. And then the upper wicks as well kind of give away that it's a failed effort. So I combined that with as you can see here, we have these inverted hammers, and pretty much every time we've seen one, we've seen some sort of a dip in price from that point. Right. So we had one again. So all these things are lining up at the time, and on the close of this bar, I decided to take a short. Okay. So I didn't enter the full position here. The reason being because this was still a high risk play. We still hadn't made a lower swing low. So a breach of this swing point would be that lower swing, and so you can pretty much see what happened right after that. Right after the entry, played out as expected. We had a sell-off deeper than what we've seen before. Or actually, over here we actually had the exact same sell-off in terms of magnitude, and so we got the same thing again, which was from the close to this swing point about 50 pips. So I had a half position here, 40 or 35 pips stop, or somewhere above this high here, and when price got to here, I went to break even. So now my stop was sitting right here, and we had this leg up off this support level, which was kind of expected, and there's a reason I was willing to add below this level, because I knew there would be some buying at this level, but once it got below it, there'd be a good amount of selling. So one of the things I was looking at on the 4-hour, we have this trend line coming up, and so I figured there'd be some buyers there because we are still in a bull market, so that might be a likely target. And so going back to an hourly, that was one of the things I had in mind when I was thinking about adding to this position. So when we were kind of going up in this little correction here, I was expecting to get stopped out at break even, or if that didn't happen, then I would add to my position here, and put a stop above the nearest swing point. So looking at it from this perspective, if I was to enter, let's say, a few pips below this level, my target would be roughly 50-60 pips away, and on the stop, since I had no idea how high this correction would go, I would have about a 50-60 pip stop. So to me, that maybe wasn't the best risk to reward ratio at the time. And if you look at it from a 4-hour, there's a good chance that it could have been less, because as time progresses, this trend line is rising. So I had no idea that it would break through right here and come down. So I kind of anticipated, okay, what happens if it breaks through over here? And at that point, I only have about 38 pip profit margin on my 60 pip stop, and to me that wasn't exactly the best risk to reward ratio. So anyways, I was watching this last night around London Open, and when we had this candle close right here, I decided to enter my second position. So what I did was I moved my stop from up here to break even on the first position, right? I'm sorry, it was already a break even on the first position, so I had no risk on that trade. And then on the second one, I put a stop above this high, so that gave me about a 25 pip stop. So I know I had both positions in, break even on the first half, and then 25 pips in the second half. And what I did was, for one of them, or other one I just entered, I put a 50 pip profit target. And the reason for that was because we had some support down in this area. Alright, so you can see here's a little bounce here, and then if we take it further back, you can start to see some congestion through here in the price. And I think if we go further back, there's some more price action that kind of supports that idea. Like coming through here, you can see that these there's some highs here, swing high here, support here, resistance, pretty much congestion through here. So and then over here there was an area of support. So was that the right line? No, sorry, looking at the lower one here. Area of support here, resistance. So you can see that price is respecting that level. So I had a profit target there, 50 pips, and so essentially I went to bed at that point. And it looks like that one got hit, so I made 50 pips on that one. And because the second half of my trade from up here was at break even, I was looking for a runner at that point, because the daily candle was looking pretty good. As you can see, there was selling all the way through the end of the session, right? So that was encouraging for me to hold on and say, okay, well, there's a good chance maybe we'll see some more selling pressure come in here. But price did manage to turn around, and it just kind of took off after that. So we had this close up here, that pushed me out of the second position, so I made 50 pips on that one, where the profit target was hit. So overall the potential for this move was about 100 pips, right? Almost exactly 100 pips, and I was able to take 50 out of it. But pretty much after that, you can see the price action here. We had a little reversal bar, then move into resistance. Then you can see we had put another reversal bar in, which would in my mind be continuation. We never made a lower low. Maybe some news came out overnight and we pushed up and closed above this swing point. And at that point, looking at this, kind of just give it a rest and said, okay, let's see what it develops here, because there's still a fundamental bias to the upside. And as you can see, we never really looked back. So that's pretty much that trade, and the dynamics of it, and how I was approaching it. Turned out okay. Made some pips on it, so no complaints there. And we'll have to see how this one sets up, as momentum does remain to the upside. So thanks for watching.